welcome everyone to today's live stream. It is Monday, July 7th, 2025. I'm your host, Jaden Sterling, founder of Sterling Stock Picker. So thanks so much for being here. Happy to have you here with us. And let's dive in. I want to talk about the market moves to make for this week. And currently we have the Dow selling off heavily, down 1.15%, down over 500 points. The NASDAQ down about a percentage point, $201. And we've got crude up slightly, crude oil 67.27 US a barrel, silver under that 37 US dollar threshold, and Bitcoin is holding well over 105,000 up to 107,935 US dollar per coin. So I want to bring to your attention today earnings this week. Very, very quiet, very slow, nothing to report today of significance, and minimal this week, as you can see. So it's not going to be earnings that moves the market. It's going to be more of the macro conditions, and I think we really need to pay attention to this statistic here. It's the percentage of stocks above their 50-day average, moving average. And currently it is sitting at 71, opened up at 75%. We're just seeing a tremendous number of stocks well above their moving average, as opposed to April, when we were at 10% of stocks. Remember, it was like a lot of the stocks were below their moving averages. So what does that mean for you? It means that the market's getting top heavy. It's getting a little top heavy here. And, now more than ever, you need to be really selective when it comes to stock picking, the way you're investing. Nothing wrong with pulling some money off the table and or buying puts. I just picked up some contracts on Reddit earlier, just about an hour ago. They're up 25% right now. And when you click over to options view, whenever you see a market that's really getting toppy like this, there's nothing wrong with adding some puts to your portfolio, to your strategy here. And, you can pick up the, now one thing I would say, I would go for the expiry, give yourself a little elbow room, a little bit of time here. Looking at the July 18th puts gives you a little time, means you don't have to time the market as much as if you were to expire them, buying the contracts that expire this Friday on the 11th. So for, you can look at maybe the 146s. The stock is at 152. 146 are going to run you $370 a contract. So just consider, consider how much you want to invest. You don't want to go too far out of the money, but you also don't need to go in the money either with contracts like this, as we're seeing these big swings in the market. I had some contracts on from last week on Reddit. I sold them this morning, made money with that, waited for the stock to go up a little bit and bought the puts back. And now, like I mentioned, they're up 25%. So super easy strategy to do. And, I talked the last time I was with you about the circle leaps. These are long-term option strategies. We talked about the June 18th, 2026 expiry, so that you don't have to spend $20,000 to buy 100 shares. Rather, you can look at investing $49.80, less than $5,000, to still take advantage of those 100 share based on a leap, one leap, right? One leap equals the equivalent of 100 shares. And I'm going to be talking a little bit more about these strategies that I utilize on the regular basis, because we are getting ready to launch our frequent trader program in September of this year. We've been really busy about putting things together for that, what's included, what we're going to offer you. And, once we have more information together, I'll share that with you. But basically, you're going to see the trades that I'm doing 3 times a week. I'm going to live stream early in the morning when the market's just open on Monday, Wednesday, Friday. And you can decide, how many trades you want to participate in or not. Totally up to you. You can be a fly in the wall. Whatever you'd like to do is just fine. But I think it's really important in a market that we're going to see additional volatility to be a little more proactive in your investment strategy. Because if you're thinking that you're just going to simply buy and hold these stocks, you're really missing out on some major opportunities here to make money along the way rather than buy and hold. So that's what I'm doing. I'm buying some Reddit puts this week, kind of basically almost trading them, buying one day, selling the next, but still allowing for the maturity to be a week or 2 weeks out. I think that's really important. You don't want to be a market timer, but rather you want to be an investor who is watching. You only need to do this with a handful of stocks where you're actively taking a position in the contracts and or the underlying stock. Totally up to you. I also want to mention I'm doing one other thing with a stock that this is my number one pick for the year, was Big Bear. And I picked it last December. Let me get the right ticker symbol. BBAI is the ticker. Big Bear. And picked it last December. Started buying it right around $3 a share. And it skyrocketed earlier in the year in early February, mid-February to 974. It just had this huge upward swing and then promptly sold right off. So we're seeing, more recently a bigger movement. It really consolidated in the $3.50 to $4 range. And from there, it's moved up to where it is today to $7.52. It closed last Friday, $7.75. Super nice move here recently. But look at the MFI and the RSI. It's starting to tell us that this stock is overbought. So with that type of condition, when you have a profit in a stock, sell covered calls. Really important. I just sold, expiring July the 11th. This Friday, I sold the 9 contracts against my position personally because I thought, I don't mind if I'm called out of the stock. The bid at that point was 20 cents and I would have doubled my money knowing that it will pull back and I'll re-enter the stock at some point. I don't know if I'm going to get out at 9 or not, but a really nice contract, 20 cents on, if you have a bunch of shares, that adds up quickly. So that's the move on Big Bear. Start selling some covered calls against it if you're in a profitable situation. These contracts are looking great. They're now on the weekly because the stock is so frequently traded. And let me bring to your attention, the volume on this stock has been incredible. Last week we saw hundreds of millions of shares trading. Look at this trading day, 375 million shares. If you multiply that by 750, you're looking at over $2 billion, make close to $3 billion. Well, heck, the market cap for the stock is only $2.2 billion. So there you go. You got a major winner there. You got the proverbial lion by the tail, if you will. And nothing wrong with selling some covered calls against a position like this where you have a nice profit and, look at all these big green bar days, huge buying. But we know that, even back here, if history repeats itself, we're going to have some selling coming here shortly, profit taking. So we don't want to be caught holding the bag with this stock. Consider selling those covered calls. 9 strike price expiring this Friday, and then we'll take a look at this next Monday to see what's going on with the stock and if we still have it in our portfolio. Hope this helps. Have a fantastic week, and I'll see you all next Monday. Bye for now.